This excerpt from Tragedy and Hope by Carroll Quigley offers a detailed examination of the influence of international banking and financial institutions on government policies and global events. These points provide a historical perspective on the role of financial institutions in shaping global events and influencing governments. It's a reminder of the importance of understanding the mechanisms of money creation and the power dynamics between financial institutions and governments. The text highlights several key points. The creation of money out of nothing by central banks and the banking system. The rise of international banking dynasties, such as the Rothschilds and Morgans, and their influence on governments and industries. The control of money supply and the promotion of the gold standard as a means of maintaining financial power. The influence of central banks, such as the Federal Reserve and Bank of England, on global financial policies. The role of tax-exempt foundations in the relationship between Wall Street, the Ivy League, and the federal government. The infiltration of left-wing political movements by Wall Street to control and guide their actions. The existence of an international Anglophile network that operates in international affairs. Page 51, the merchant bankers of London had already at hand in 1810 to 1850 the Stock Exchange, the Bank of England, and the London money market when the needs of advancing industrialism called all of these into the industrial world which they had hitherto ignored. In time they brought into their financial network the provincial banking centers, organized as commercial banks and savings banks, as well as insurance companies, to form all of these into a single financial system on an international scale which manipulated the quantity and flow of money so that they were able to influence, if not control, governments on one side and industries on the other. The men who did this, looking backward toward the period of dynastic monarchy in which they had their own roots, aspired to establish dynasties of international bankers and were at least as successful at this as were many of the dynastic political rulers. The greatest of these dynasties, of course, were the descendants of Meyer Amschel Rothschild, 1743 to 1812, of Frankfurt, whose male descendants, for at least 2 generations, generally married first cousins or even nieces. Rothschild's 5 sons, established at branches in Vienna, London, Naples, and Paris, as well as Frankfurt, cooperated together in ways which other international banking dynasties copied but rarely excelled. The names of these banking families include Rering, Lazard, Erlanger, Warburg, Schroeder, Seligman, the Spires, Mirabaud, Mallet, Food, and above all Rothschild and Morgan. Even after these banking families became fully involved in domestic industry by the emergence of financial capitalism, they remained different from ordinary bankers in distinctive ways. 1. They were cosmopolitan and international. 2. They were close to governments and were particularly concerned with questions of government debts, including foreign government debts, even in areas which seemed, at first glance, poor risks, like Egypt, Persia, Ottoman Turkey, Imperial China, and Latin America. 3. Their interests were almost exclusively in bonds and very rarely in goods, since they admired liquidity and regarded commitments in commodities or even real estate as the first step toward bankruptcy. 4. They were, accordingly, fanatical devotees of deflation, which they called sound money from its close associations with high interest rates and a high value of money, and of the gold standard, which, in their eyes, symbolized and ensured these values. And 5. They were almost equally devoted to secrecy and the secret use of financial influence in political life.